What up, and welcome to the coffee shop, everybody. This is your host and barista, Eric, and I'm here to give you an update of what's happening with the SMC indicator, and it's related to that post that I put up on YouTube earlier today. I basically told you that I have a crystal ball right here. There's my crystal ball, right? So it's the ability now to tell when price is going to continue in a specific direction or if it's going to reverse from its current direction, even if it's going to be doing a pullback. Like this is just like big time. This is like key. I'm going to give you the Easter egg, so to speak. I'm going to give you a little insight on that one. You can attempt to do this with other SMC indicators, but 9 out of 10 they're going to fail for you because I've looked at a lot of SMC indicators. I've looked at a lot of them, right? And I've come to find out that really they are just pivot indicators with volume analysis, and there's really nothing there. There's really nothing there. Okay, anybody can do a break of structure indicator. Anybody can do a pivot indicator. Anybody can do a CPR, central pivot range indicator. Anybody can do one. Even if you took them all and combined them together, it's really not telling you what you need to know. And I'm going to show you why that is and why this indicator is different. So let's get to the chart. Do a little transition right there. Boom, we're good. Now let's get into my chart so I can see it. And like I was saying, there's a few updates that have been done to this indicator, and I'm going to show you what they are right now. First of all, you got your bars are going to be colored like a specific direction based on the actual trend. You see that they're actually moving up here, but they're not green because you don't actually enter into an uptrend until this candle. So this is actually your higher high and your higher low, like a combination of the two, right? It's not using a zigzag or anything else. It's using a specific calculation that I came up with, right? And even here, even though these bars are red and they're moving up, this is technically a downtrend, right? You're not going to be looking to catch a move back to your swing high. You're going to be looking for a short after this move. And the process actually takes a few steps before you can actually take that short position. And I'm going to show you what that is. Okay. Now, like I said, anybody can do a break of structure indicator. Anybody can do a pivot indicator. Wonderful. That's great. But you need to have specific calculations to do it. You also need to know what happens to price when it breaks structure. Like how is it going to be moving next? Okay. And what I'm going to do is I'm going to show you very quickly. This is the Easter egg for you price action traders to understand what you should be doing when you break structure, for example, right? Now, this particular part you could do on any indicator, okay? What you'll see is like we've got a range here, right? This is great. This is perfect. So you can see that you're inside of your support and resistance. The support and resistance is drawn out by specific price action activity based on the SMC. And you can see where your break of structure marks are. There's another break here, there's a break here, there's a break here, right? Now, why is it that when price comes up, it creates structure, right? Does this little move, comes up and it breaks structure. Why does it pull right back? Well, that's very simple. It comes up again and it pulls right back again. So it literally breaks structure and immediately pulls back. Breaks structure, pulls back the other way. And again, look over here, right? Breaks structure, continues to move a little bit, and then it pulls back. Why does it do this? Because the market cannot move without liquidity. So what I've come to find is this. When you break structure without breaking liquidity, you immediately have a pullback. You go up and you break structure, you did not break liquidity, you immediately have a pullback. And that's just how it works. You cannot have enough movement in price to break structure without having liquidity in that market. And if you don't have liquidity, the price cannot continue. That's just the way it works, right? You need more gas in the car or you can't get over the hill. There you go, right? So in these two instances, you'll see that you broke structure and it immediately pulled back. This instance, it broke structure and then it broke liquidity and decided to keep moving a little bit, and then it pulled back because it broke liquidity after structure. But what happens when you break liquidity before structure? You break liquidity before structure. Then you have a longer move. At that point, you know you can get to the next structure, right? That way you know you can move up even further. Green bars, right? Liquidity starts forming at this point. Price comes up, doesn't break it, it's not mitigated, makes this super low. The market gives you a new low, right? And then you get a break of liquidity. This is a good place to enter for the bottom of the range, right? You do that, you get in at the close here, okay? Or the close of the next candle. Either way, you know that you broke liquidity. You have liquidity. And look at this super, super low that the market just kind of gives you, right? You could immediately target the next structure, right? You broke liquidity, you target the next structure. You broke this structure, target the next one. And not that you would have noticed, but if you look at this bar, okay, look at that. I'm not sure if you could see it too well, right? Let's kind of turn this off here. There. I'm not sure if you can see it too well, but there's a dotted line inside, okay, of that pivot level, of that structure. This is structure and liquidity at the same time, okay? And it's inside of support and resistance. This is like super powered, okay? You broke structure and you broke liquidity at the same time. Now, I'm taking this for a new entry here. I would use the RSI formula here and get this massive move, right? I would just get this tremendous move. This could be like a 1 to 4, let's say, okay? Just as an example, this could be a 1 to 4. This can be like this. It's a 15% move. Why do I say that? Because you broke structure and liquidity at the same time. Now, it's inside of support and resistance. You would wait for another one to take place outside of resistance, whatever, you know. So anyway, so this is the setup for a big move. And then again, it happens right here, okay? Oh, I got my thing backwards right here. Well, yeah, I'll use this here, okay? Price dances around. It hits your support and resistance. Bang, 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 right? Does all this stuff. Breaks structure on the next bar, but it also broke liquidity and structure. So this is an additional entry for a long position. And again, you have a super, super low to use in the market right there, okay? Now, you get two entries, one here, okay? I say this because structure and liquidity were broken at the same time. So what does price do? It does this. These massive moves take place when structure and liquidity are broken at the same time. Every single time. How far is this going up? Let's see. I don't know. Either way, this move alone is a 14% move from here. And it is a, there we go. And it's a, what, 17% move on price from here. So this is how you can get these really, really massive moves. And this is what this SMC indicator is going to do for you. Now, again, this broke bullish liquidity and bullish structure at the same time. And if you don't believe me, well, recently there was a massive dump in the market, right? And this is the first place that there was bearish liquidity, bearish structure, and a support level all broken at the same time. This red area is support, okay? Support. The bottom is the strongest area of support. It was broken with this candle. You can see right here, structure. You have structure here. There's a dotted line here as well. You have structure, liquidity, and support, all broken by this candle. Okay, so where's your swing high? Your swing high is already drawn out. There's a candle. Here's your swing high, right? If you want to go for the actual swing highs, right there. Moves up, okay? And the last place that I saw structure drawn out was in a few places. You've got a low here, right? You've got a low here. And look down here. There's one there, okay? And there's one I already drew it out way down here, okay? You get these lows that you can get back to. If you looked at a higher time frame, you would just see these huge, okay? Now, at this point, this is the only place in this entire area. Structure, liquidity, and support. They were all broken in one big move, okay? You could have just set a target, set a target, set a target, and set a target. And maybe set another target. And look what price did, okay? Comes all the way across. You trade this like you're supposed to, but you have this for a long term, right? And what does price do? Comes all the way down. And it will keep falling. It'll get down to this level. When it gets here, I'm going to stop. But very interestingly enough, look at this one and this one, okay? Look at these two. I'm just going to take this range right here, okay? Let's just do this. Go just like that and just drag this over. Right here. And you'll see how price hung on this level. Came all the way down. And it got very disturbed here. It didn't like this at all. It came all the way down from all of this, right? Big candle came all the way down and it got stopped on this level, which was drawn out way over here, way over here. We can't even get there right now, right? And of course, it also came down and tapped into the liquidity that was left in this area. This is that big move that Bitcoin and the other markets had just made, right? Let's wipe all this out. This is the move that everything made over the last 24 hours, 48 hours, whatever the case may be. You could have just ridden this thing all the way down, all the way down. Now, the cool thing is here, this is telling me that bullish liquidity is left at this point. There are orders in this area. There are people waiting to get here. And I'll bet this is the 50% retracement. Let's take a look and find out. Let's see. So this is the move all the way down to here. Here's the close. Start of the move takes place right around here. Let's Fibonacci this from here down to right there, right? This is the bottom of the move, right there. Look at that. 50% retracement is that liquidity level. Okay. Price is going to attempt to pull right back into that spot. I'm not going to tell you where that price is. I just want you to understand that this new SMC indicator is no joke. It does not use fib levels. It does not use percentages. It uses precise calculations of what price action is doing. So hope everybody enjoys what's going on with this real soon. Red bars means you should be looking for shorts. Green bars means you should be looking for longs. And it's regardless of whether you are range trading or not. It will tell you. You can get to structure and reverse, get to structure and reverse, get to nothing. There's nothing here, right? Don't do anything. You've got no structure, right? When this price happens, you have no structure and you have no liquidity beneath you. So there's no reason to go short. You're still looking for longs, okay? You get this, there's a divergence that takes place. First target, second target, third target. Take your longs, right? This is going to be really, really cool for you guys. Hope you enjoy it. See you all next time at the coffee shop.